In this video, we're going to talk straight about whether gold is going to go up or down. Lately, no matter where I go, whether I meet people in person or see them on live streams, the question I get asked the most is, Sai, is gold going to go up or down? Or sometimes people ask, gold has dropped a lot lately. Is it a good time to buy? Do you think I'm a gold shop? Even real gold shops might not actually know whether the price of gold will go up or down. If anyone really knew, they'd all be rich by now. But anyway, even though sometimes I just want to sing on live streams or dress up as Sailor Moon, my fans always request to talk about serious financial topics all the time. So in this video, we're going to take a much more serious look and talk about whether gold prices will go up or down. Since you specifically requested this topic, and I truly love providing valuable content for my fans, I really hope the information in this video will help you decide whether you think gold will continue to rise or potentially fall from here on out. Sponsored by GoldQuick. So what do you want to do? You can support Thai Money Monster through this QR code, or you can easily support the Thai Money Monster segment by liking, sharing, commenting to chat and interact, or subscribing to the channel. And for anyone who wants to support a woman who dreams of being Sailor Moon and wants to keep telling financial stories for a long time, you can become a member. Thank you. Thank you. Nice. Let's get started. Let's see what events have happened with gold recently or in the past few years. Let's start with this question that people always ask. Pasai, gold prices have dropped a lot. Should I be worried or should I sell it off? Let me say this right at the beginning of the clip. This is not an investment advice video. Pasai does not give investment advice. Because when it comes to investing, it's your own money at stake. If you end up losing money, we're not going to sit here and comfort each other. So make sure you do your own research. But since we're already here and I want to take care of my fans, I've gathered some information for you. I think this info will be really helpful and save you a lot of time searching for it yourself. You can take this and look into it on your own to decide what you think. Whether it goes up or crashes depends on your decision. Let's start by looking at this chart. This chart shows that for the first time in modern financial history, central banks around the world have more emergency reserves in gold than in US dollars. The amount of gold held by central banks worldwide has surged past the amount of US dollars. And that's because over the past 3 to 4 years, central banks everywhere have been aggressively stocking up on gold. They've been sweeping up gold into their reserves without really caring much about the price. If you look at the first quarter of 2026, central banks around the world bought an additional 244 tons of gold, even though the first quarter of 2026 was when gold prices hit an all-time high, the most expensive in the history of the world. And if we look at this chart, we can see a certain trend, which is that during the period, in the first quarter of 2026, when gold prices were at their highest, central banks brought more gold into their reserves than in the previous quarter, which was quarter 4 of 2025. It was just a bit more, but still higher. And in the first quarter of 2026, central banks around the world bought more gold than in the first quarter of 2025. Year on year, the amount increased. So, as I just mentioned, the data shows that central banks around the world are bringing gold into their reserves without caring about the price. Even when it's expensive, they still buy. So the question is, why? Why are central banks around the world buying so much gold for their reserves? One of the main reasons is that even central banks themselves don't fully trust fiat currencies, whether that's the US dollar or fiat, even if it's their own country's currency. The logic is actually very simple. People put their money into what they trust. So when we see a chart showing that central banks hold more gold than dollars, that is, they're putting more money into gold than into dollars, It means that even central banks trust gold more than fiat currency or government-issued money. So the question that comes up is, when people say that central banks don't trust fiat or trust fiat less than gold, isn't that just a vague feeling, something that's hard to really grasp? If that's the case, then we have to ask, do you believe in inflation? Because what exactly is inflation? Inflation means things get more expensive. Why do they get more expensive? Because the value of money goes down. Now, do I believe this statement? I believe it halfway, but the other half needs to be explained. The part one belief is that inflation is real because the value of money is always decreasing. The other half that needs explaining is that everything gets more expensive. When we say things are getting more expensive, we need to explain what we're using as a measure to say that prices have gone up. Let's look at this chart. This shows the prices of commodities since 1972. Why start from 1972? Because President Richard Nixon took the US dollar off the gold standard in 1971. That's why this chart starts from 1972. In this graph, there are two lines. The first line, the blue line represents the price of goods compared to fiat currency, government-issued money. You can see that the blue line, wow, it's inflated. Prices of goods have skyrocketed, shooting up like crazy. The other line is the price of goods compared to gold, the black line. And with the black line, you'll notice that the price of goods has actually gone down, and it's a continuous downward trend. If you compare the price of goods to gold, everything actually gets cheaper on average by 0.8% per year, compounded over 200 years. And don't even try comparing it to Bitcoin, because that would be way too shocking. So why is that? Why does comparing to gold make prices seem to go down so easily? Is it because gold keeps getting more expensive all the time? Yes. And if you really look at it, according to theory and technical principles, the price of goods actually, as technology improves over time, things should naturally get cheaper. We produce food and goods with better technology, which means we can make more and make it faster. That means we can supply more. And the more we can produce, the easier and faster it gets. Things really shouldn't be getting more expensive. But the only reason everything, despite better technology, easier and faster production, and higher output, still gets more expensive is because money loses its value, because the money we use is of poor quality. Now, at this point, don't go selling everything or putting all your money into gold just yet. Take it easy, at least finish watching this video first. Because if you're asking, well, in that case, why not just ditch money and put everything into gold? Wouldn't that solve the problem? Listen first. It depends on how you hold gold and in what form. This isn't even talking about asset allocation yet, but you shouldn't go all in on anything, including gold. So, is holding gold really problem-free? You have to ask first, what kind of gold are you holding? Are you talking about gold contracts, paper gold, or physical gold you can actually touch? I'll explain it to you. Because when people talk about buying and selling gold, most of them don't buy physical gold. Most people buy paper gold, or what's officially called unallocated gold. Gold, translated into Thai, means unallocated gold, or gold that isn't tied to a specific bar. Unallocated gold is the official term for paper gold contracts. These paper gold contracts claim that your name, as the buyer, should be attached to some gold bar in a vault somewhere. But in reality, that gold bar might not even exist. Now, if you ask whether there are people who don't care that the gold might not actually exist, yes, there are. That's because for people who buy gold just to trade for profit, they don't really want to physically hold the gold anyway. They just want to accumulate or trade it for its value. And that's fine. It depends on each person's convenience and preference. But if I were to explain where the problem lies, the issue is right here. According to information from Alusta Macrate Gold Money in 2021, it was reported that the total value of gold contracts in the world was around $635 billion. Meanwhile, the actual physical gold used to back these paper contracts was only about 500 tons. 500 tons is roughly equivalent to 16 million troy ounces. which, if you compare it to the current gold price, it would be around that comes to $4,360. So 16 million troy ounces of gold would be worth roughly $70 billion in today's market. Now, here's the thing. The problem is that paper gold is really worth $635 billion, but the real gold backing it is only $70 billion. Do you see the problem here? The actual gold is worth just 1/9 of the paper gold. To put it simply, imagine that one bar of gold gets turned into a whole lot of different paper contracts over and over again. 9 times, that means there are 9 paper contracts backed by the same gold. But this system can keep running and won't have any problems as long as a large number of people don't try to withdraw their gold at the same time. Or to put it another way, if at any moment, even for just 5 seconds, a bunch of people try to withdraw their gold all at once, the whole thing will collapse. So this method is actually one of the mechanisms that allows the Western world to suppress the price of gold below its real value. How do they do that? Let's quickly review Economics 101, supply and demand. The more supply there is, the lower the price will be. Okay, keep that in mind and let's continue. So even though there's only $70 billion worth of real gold in the vaults, they can create and sell gold contracts worth up to $635 billion. How is this any different from the process of printing more money? It's essentially the exact same thing. And what exactly does that do? It allows them to sell more gold, making it look like there's way more gold supply than there actually is in reality. So when the supply is high, the price isn't just the actual fair market value. The price isn't what it really should be. Now, if you take a look at this graph right here, it shows the real price of gold, or the fair price value, compared to the current trading price. The gold line here shows the actual trading price right now, which is around $4,360 per troy ounce. Meanwhile, the so-called fair price value, or what the price should actually be, is currently $18,500 per troy ounce. In parentheses, if there were no money printing, that would be the price. This right here, yes, this means that the true price of gold has been suppressed by the Western world for 50 years. Let me note this at the top of the page. The Western world has been holding down the real price of gold, keeping it below its face value for 50 years. They've kept it suppressed. Now, let's go back to the question that I think many people are wondering about. Let's revisit the issue of withdrawing the lawsuit. Can we do that again, sister? So, is it actually possible for people to rush in and withdraw their gold? Will people really flock to withdraw their gold? And will they come in droves because people want to withdraw their lawsuits? Why would they want to withdraw them? Honestly, if this was 23 years ago, you could say there was no chance that the paper gold market would ever collapse. It was just a paper-based system running smoothly without any issues. Because in the modern financial system, there are incentives for people to hold gold in the form of unallocated gold, that is, buying paper contracts, whether it's free of fees or offering special tax privileges. Things like that are meant to make investors feel like, hey, trading is easy. You can make a profit with just the click of your finger. And while everything was running smoothly, suddenly someone came along and made it less liquid. And that someone is China. Honestly, if I were America, I'd hate China too, because they really do trip me up at every turn. The whole situation is actually pretty complicated. Then there's the issue of China's gold corridor coming into play. I once did a trip. You can go check out the corridor for yourself, but for this clip, I want to keep things concise. So let's start with the fact that for decades, the central banks of the Western world have been releasing gold into the market, almost like renting it out, leasing gold into the global market so that people can use it as collateral and make paper contracts, right? The problem is, when the Western world releases gold from their reserves, which, to be honest, is like the lifeblood of the system, the financial body of the Western world, once the gold is released into the market, it's gone for good. It doesn't come back. Most of it ends up in Asia. And where in Asia buys the most gold in the world? That would be China. Over the past 10 years, China has been buying gold aggressively, like, wow, really aggressively. And China isn't just buying gold that comes from the Western world, they're buying gold from everywhere. In 2025 alone, China imported gold 939 tons. That's an enormous amount, both in terms of volume and proportion, because globally, we can mine about 3,500 tons of gold per year, and China alone took a quarter of that. This means that China's cumulative gold imports from 2015 up to now have reached as high as 14,000 tons. And do you know what's important here? Remember the exercise I asked you to do earlier? What is particularly important to recognize is that China is buying gold at a price that they know very well has been suppressed by the West for the last 5 decades, deliberately kept much lower than it should be. And this might be the exact same reason that central banks all around the world are fully aware of, which is why over the past 3 years, central banks globally have been aggressively accumulating and sweeping up gold at the highest rate ever recorded in modern history. So if you were to ask whether central banks around the world are truly aware of this trend, about this issue, that's why they've been sweeping up gold into their reserves. But are they buying less paper gold? Has the popularity of paper gold decreased? We can see this from the Comex Gold Futures Open Interest, which measures the volume of paper gold trading. It's dropped to its lowest level in the past 13 years. So it's definitely less popular now. This means that people are probably starting to think, no matter what, paper gold will eventually have to be replaced by physical gold, right? This is another simple point to observe. If investors are considering whether rising or falling gold prices will benefit which side of the world more, the answer is China. They've been sweeping a lot of gold into their reserves, bringing a lot of gold into the country. So the ones holding a lot of gold aren't just the Chinese government, but also Chinese private companies and consumers in China. They also hold a lot of gold. So if there's any news or any event at all that causes the price of gold to rise, especially if it surges up, it will be beneficial. On the Chinese side, we might ask, so what's happening now? Why is gold dropping without a break? One of the reasons, PSI, is government bonds. The bond yields on government bonds are very high right now. For example, the 30-year U.S. government bond, as of May 19th, the yield went up to 5.2%, which is high. That means when comparing gold to government bonds, people believe that both are safe havens, but maybe they're not the same anymore. Government bonds are offering returns as high as 5.2%, while gold is a safe haven that doesn't provide any yield. So it's possible that money is flowing out of the gold market into the government bond market, since investors might think, if they're offering such a high return, 5.2%, I'll move my money there. But in any case, government bonds with yields this high aren't necessarily safe. But if I were to explain it in detail, it would take a long time. I'd like everyone to go back and watch the video I already made about government bonds being in the danger zone. Because when government bond yields rise this much, it means inflation, it means the cost of money throughout the economy is going up, and it also means there's been a significant loss of confidence. And debt is never a good thing. But if we add this to the topic of gold, these government bonds with such high yield, this right here is actually one of the warning signs that faith in fiat money is fading. Because if you compare different currencies to gold, I would like to take a moment to show you this graph from the World Gold Council. This graph shows the price of gold compared to 10 major different global currencies. If you look at January 2025, the gold price index in USD is currently sitting exactly at 1. Then, by January 2026, the gold price index against USD is at 206. This means that the purchasing power of $1 in terms of its ability to buy gold has been cut in half within just 1 year. This is one of the periods in history where currency value has depreciated the fastest compared to gold. To sum up this clip briefly, whether you like gold or not, whether you're familiar with gold or not, that's one thing. But what's even more important is You have to do something about the hard-earned fiat money you earn and hold, because fiat money is inflating and steadily losing its purchasing power faster than at any other time in modern financial history. Everyone around the world, including central banks, is already actively preparing for this.